What's up, YouTube? Welcome back to my channel. Guys, if you're into things like personal finance, investing in things like stocks and real estate, buying precious metals like gold and silver, please like the video, subscribe to my channel, and check out my website, My Road to Wealth and Freedom. I'm always throwing up content on there about building net worth, passive income, investing strategies, that type of stuff. Quick disclaimer, I'm not a financial advisor, so please do your own research before following any of the strategies that I discuss on this YouTube channel or investing in things like gold, silver, any of the stocks or real estate stuff that I talk about. Do your own research, consult with a financial expert, a financial advisor before making any investment decisions. This channel's just purely entertainment only. Okay, guys, today, Wednesday, March 24th, 2021. Lots has been going on, so I thought I'd throw out this video. Um, of course, stock markets started correcting a little bit. 10-year bond yields have been going up to about 1.75, I think, and then back down to 1.62 we're sitting at today. Gold and silver have been sort of seesawing back and forth. Gold a little bit off the bottom. Silver's a little over 25 bucks, I think. Gold's about 17.30 and change, something like that. Yeah, so and I've basically haven't done a whole lot this month. I'm not going to lie to you guys. I've been just basically stacking cash in preparation for making that lump sum mortgage payment in a couple months. And I have to say, it is so boring just saving cash, not buying things like gold and silver, not investing in the stock market, not, trying to find rental properties and buy this, buy that. I'm just kind of playing it safe. And I've mentioned this a few times in my last couple of videos. It's basically my plan, get out of debt, get rid of my mortgage, and just invest the hell out of that extra cash flow. I feel like I won't be missing really a whole lot at this stage. I mean, markets are at all-time highs. I've been going on about this a lot too, so I'll spare you the reasoning. But I just noticed in the past couple of weeks, a lot of interesting things have been happening. Um, a lot of people, a lot of my friends, a lot of my acquaintances, stuff like that, a lot of these guys are out there looking to buy second homes, vacation properties, all sorts of stuff. And the story I'm hearing from them is all the same. Money's never been this cheap. Money's so cheap. Who cares? Look at what housing's done. Look at what cottages and and all these type of real estate things. Look, they've been on a tear and they've done extremely well through this 2020 2021 period. And I'm in Canada, and that's we've done very, very well. In fact, for the last 20 years, the housing market has been on a tear. We never did end up with a correction like what happened in the U.S. in 05 to 09, somewhere around there. And I know my friends in Australia will see that too. For them, it's the bull market in housing has been going on even longer. It's been like at least a 30+ year bull market in housing. And what that's done is essentially it's pushed up the prices of homes so high. And in any of the metropolitan areas, you're looking at average home prices, right around the $1 million mark. And that ain't cheap, no matter how cheap they tell you money is. I'm trying to pay off. I owe like 150,000 or something like that, and it's not easy just to kind of save that up and pay that off. So I can only imagine, if you're taking out a mortgage on $1 million home, what is it, 800,000? You'll probably have to put 20 down. Ouch, that would be tough. But I'm hearing the same things over and over and over again from everybody. And the millennial guys that I know, they're all talking about crypto, they're all talking about stock market and this and that. And they've all done well. 2020 is their kind of banner year that they mentioned. They all started investing when this market crashed back in March, which was a really smart idea. And they've made out like bandits. And some of them have been smart enough to realize that, they've been extremely lucky. So get out while the getting's good. Um, but others are still hanging on, and they see this as this is going to be a whole new bull market, and I have my own thoughts on that. Of course, I've told you guys a million times. I see things at all-time highs. I see risk everywhere. I am playing it safe. I am I got a lot of cash on the sidelines. I'm stacking cash for this mortgage. I want to get out of debt. I want to be basically in the best possible financial situation that I could be in, so that when things happen, I'm not going to be caught. And at the end of the day, I figure, what, like, I've sold off the rest of my bank shares. I shouldn't say all of them. I have a very minimal amount now. And I've done quite. I can't complain. I agree with these guys. If you invested back in March, like I was doing, like these other guys are doing, you're up considerably depending on what you invested in. You're probably at least up 25%. I'd say at the lower range. And if you invested in any of these tech stocks back in March, you're probably up triple digits or something insane. And that's great, but sooner or later, it's just my thought that I guess I'm not alone in this either. Like, the music's gonna stop, and when that happens, what will happen? I do think there's a lot of economic damage that's been done, that's been sort of masked by all the government stimulus that's been put out there. I see the U.S. is sending out $1,400 stimulus bills. Canada's still running their emergency unemployment benefits and that type of thing. So governments have really stepped up here. They're trying to kind of make everybody whole, because I think they really realize the scale of the calamity that's going to happen if they didn't. So yeah, anyway, I just kind of want to throw that out there. But again, why are people basically gambling in the real estate market? Real estate can be illiquid if the market turns. You have to take long-term debt to pay for it. And, if you have one home, that's enough risk. Why do you want to go out and get all these other homes, secondary homes? They're not even like rental properties. They're just literally like, buying up real estate, tracts of land and stuff like that, with no real thought about how they may sell it one day or what they will do with it, how that will produce an income. I'm all for investing in real estate if it makes sense. And my experience was the price needs to be right. It needs to be cash flowing. And yeah, like, if you live far away, you gotta like account for that as well. You'll need property management, and there's always expenses and fees and all sorts of stuff. When real estate investing is done right, it can be very, very profitable. I don't want to like sound like I'm against real estate investing. I'm not. And I'm just sort of, I guess, on the sidelines myself, waiting for my opportunity to jump back in at some point. But that some point is going to be when I'm in a much stronger financial position. I want my mortgage paid off. I don't want to have any debt. I want to have a good cash cushion and a sizable investment portfolio. That's kind of my recipe for the sleep at night, long-term, steady Eddie, grow your wealth type of strategy. So yeah, moving on, gold and silver. Again, I mentioned the money printing and all this stuff. We have record high debts. I think the U.S. is over 28 trillion now. With the 1.9 trillion package, they're probably over $30 trillion. Canada, is no better off. We're well over 1 trillion right now. All the talk now is starting to turn to, how are we going to pay for all this stuff? How are we going to pay? Well, they're looking at taxes. They're looking at capital gains taxes. They're looking at real estate taxes, the estate tax, a wealth tax. They're looking at all sorts of stuff in the U.S. And I don't for a second think that the Canadian government, under good old Justin Trudeau, isn't thinking about doing the same thing. They've clearly said, they keep mentioning this wealth inequality. Oh, so much wealth inequality. Like, the funny thing is, it's essentially their own central bank policies that have created this wealth inequality. They're getting the masses to gorge on real estate and stocks at record high prices simply because quote unquote money's cheap. And and you know what, in Canada they've actually come out, the central bankers came out and said that they're like, hey, it really surprises that housing took off last year, but hey, it's holding up the economy, keeping lots of people like trades guys not employed, so it's all good. Well, sooner or later this music stops, and I really feel for the person with that $800,000 $1 million mortgage, whatever it is. Um, and then all of a sudden interest rates rise. As we saw, governments can quickly lose control of interest rates. Um, so I don't really buy the story that these record low interest rates are here forever. Sooner or later, there's going to be some sort of reckoning, whether it's the bond vigilantes like we saw last week or the week before, pushing up yields on the 10-year treasury note, or foreign investors walking away. Once the government starts buying their own bond, they can only do that for so long until everything sort of collapses, or we get crazy hyperinflation. So there's kind of, again, what happened last year was an economic shock, and people were not prepared for it after over a decades long bull market, record low unemployment. The best 10 years for real estate on record, and stocks, and all of this stuff should have put people in a position where, hey, you know what? I actually have a little bit of a rainy day fund that if I don't get a paycheck next week, I'm good. I can still float the bills. And instead, what we saw was just downright scary. The vast majority of Americans, Canadians, Australians, Europeans didn't have enough money to make it to the end of the month. That to me is so if that's the situation we were going into this mess, on the way out, there's lots of talk about all this pent up demand. Oh, there's so much pent up demand. Oh, everyone's banking their stimulus checks and getting ready to travel again. They're getting ready to go buy that big screen TV or buy what I don't buy this whatsoever. And I've said it before. I think people are just literally hanging on by a thread. These stimulus checks aren't making people rich. They're just basically floating what they can. I've also read some studies that said, consumers are tapped out. They've borrowed on lines of credit. They've done everything they can. There's a large swath of the economy that's still at a commission, and it's just really hard out there for people. So again, all the more reason to clean up your personal household balance sheet. If you got any credit card debt or loans or mortgages, take a swing at those things. Start paying them down. Get yourself into a position of strength, versus being at the mercy of whatever the markets do, or whatever bad thing may happen to the economy, or if you lose your job. There's so many different things that can really impact people's lives. And over the years, one of the reasons I actually became the way I am now is because I from basically as soon as I started working, I've seen a lot of older people, lose their job, get pushed out, due to like downsizing and cuts and mergers and stuff like that. And, they all sang the same sad song on the way out the door. And it's basically, hey, you know what? I made decent money all of these years. And what did I do? I didn't save anything. I didn't pay off my house. I didn't stay at a debt. Instead, I spent to the max. I, wasted money on all sorts of toys and stuff like that. And now look, now I'm screwed essentially. So, and I just, that, I was young, I was impressionable, and I just kind of left sort of a lasting mark. I was like, I do not, whatever happens in life, I do not want to be in that situation ever. And Yeah, so I've basically organized my personal finances, my family's finances accordingly. Um, I want to play it safe right now. Everyone's telling you to take risk. When everyone's telling you everything's okay, time to take risk, that's the time when you need to be thinking, you know what? I need to go the other way. When they're saying, money's so cheap, um, you should go buy another house or whatever, or take out buy stocks on margin or something like that. Yeah, you need to get out right now and clean up your personal balance sheet. So, and I'm not against. I Again, guys, if you follow these videos, if you follow my blog, My Road to Wealth and Freedom, you'll know that I'm not, against investing whatsoever. I think everybody should be invested. I think everybody should be investing, saving, investing, building long-term wealth. Investing for retirement, your children's college education, all that stuff. My only thing is, like, there are certain times when the system is blinking red and you definitely don't want to be overexposed in any given area. And I don't think now is the time to take huge risk, to borrow money. Certainly it's not worth borrowing money to invest or buy real estate. um, I just think, like, uh, there's a lot of speculation in all of the markets, whether it's crypto, whether it's gold, silver, stocks, the real estate, that type of stuff. I'd be very careful right now. I mean, that said, I do feel, precious metals are one of the areas that is not in a like super huge bubble. On a relative basis, gold in particular looks cheap compared to real estate, stocks, and that type of stuff. Um, Silver, I bought some silver back in, I think, late January or something like that. So I'm not against that either. It's definitely not as cheap as it's been in the past year, but you know, if you don't own any of this stuff, you might want to have a little bit, because we just don't really know, with all the debt that's in the system. Um, we just kind of just don't know how this is going to end. And now, that said, I'm not planning to buy any more gold or silver anytime soon, unless I get some unexpected windfall money or whatever. Like I said, I'm just stacking some cash. I'm gonna, get eliminate as much debt as I possibly can right now, and then on the other side of all that, maybe in the fall, I'll be in a position where I can start investing heavily again, and I can start accumulating some more gold and silver. Maybe I'll miss the boat, maybe not. I'm not sure. Again, I feel like, I got a decent enough amount that, if the worst thing in the world ever happens, I'm probably still going to be okay. So, and that's the thing. I feel like, you don't need a lot of gold and silver. You just need a little bit. Everybody should have a little bit at least. They say, like, most of these, like, hyperinflation, depressions, that type of stuff. Um, Usually these monetary collapses, that type of thing, they usually take about a year to sort out. So you might want to have, roughly maybe a year's worth of, whatever gold and silver will buy in that scenario. So, I got about, I think, a little over 13 ounces, maybe 14 ounces, something like that, of gold. I'm happy with that amount right now. Um, I have no plans to dramatically increase it, but it is cheap relative to where it's been in the last year. I think it's right back to where it was this time last year. So, and what I've learned over the years is that, um, if you don't have gold, don't focus on the price fluctuating up and down $20, $30 a day or something like that, because in the grand scheme of things, that's pretty small. Bite the bullet, buy buy that 1 ounce gold maple, or pick up a beautiful 1 ounce gold buffalo. You know, it's definitely a bit of security. It's something that's held outside the financial system. So if worse things were to arise, you got something tangible and of value that that you'll be able to use. So yeah, that's it for today, guys. Thanks so much. Once again, please subscribe to my channel, like the video, and check out my website, My Road to Wealth and Freedom. That's all, guys. Take care.